Dollar cost averaging in crypto is one of the simplest yet most powerful strategies for anyone who wants to grow their wealth without stressing over crypto volatility or trying to predict the perfect buying moment. Many beginners enter the crypto market thinking they need to time their entries perfectly, but timing the market is a skill even professionals struggle with. Instead of trying to guess when prices will hit their lowest or highest point, dollar cost averaging removes pressure and replaces it with a consistent system. It allows you to invest fixed amounts at set intervals regardless of the price, and that is what makes DCA a foundational approach for long-term crypto investing. When you understand how unpredictable crypto market cycles can be, you start appreciating how much stability a DCA strategy brings into your financial life. The core of dollar cost averaging is consistency. You choose an amount you can commit to weekly, bi-weekly, or monthly, and you invest it steadily. This approach helps you avoid emotional reactions to crypto price action. Most people panic during a crypto crash and get overly excited during a crypto bull run, but DCA neutralizes those emotional extremes. When the market is down, your fixed amount buys more crypto. When the market is up, your fixed amount buys less. Over a long period, your average cost becomes more reasonable and balanced, protecting you from the sudden price swings that define the crypto world. If you look back at major assets like Bitcoin and Ethereum, you will see that those who used DCA during both the highs and lows of past cycles ended up accumulating more over time with far less stress. One of the biggest advantages of DCA is how it supports your Bitcoin strategy. Bitcoin, being the most dominant asset in the crypto market, moves in cycles that can be extremely volatile. But through consistent Bitcoin accumulation using dollar cost averaging, you avoid buying too much at the top and too little at the bottom. You spread your entries across different market conditions, allowing the long-term upward trend of Bitcoin to work in your favor. This same method applies to Ethereum accumulation as well. Ethereum's growth is tied to network expansion, decentralized applications, and updates in blockchain technology, meaning its price action will always move in waves. Dollar cost averaging makes those waves less stressful because your goal is to catch the perfect wave at S to ride the entire ocean over time. Dollar cost averaging is also one of the safest ways to introduce beginners to crypto portfolio building. The reason is simple: it stabilizes your emotions. Market psychology often destroys beginners because the pressure of watching fast price movements creates fear, greed, confusion, and doubt. People see a sudden pump and think they are missing out. They see a correction and think everything is collapsing. They see a crypto bear market and think the entire industry is dead. They see a crypto bull run and buy recklessly. But when you follow a DCA strategy, you no longer need to worry about timing. You don't ask whether the market is at its bottom or top, you just follow your schedule. This makes investing a routine instead of an emotional roller coaster, which is essential for long-term crypto investing success. Many beginners underestimate how much damage emotional decision-making can cause. When you react to fear, you sell at the wrong time. When you react to greed, you buy at the wrong time. But when you commit to passive investing through dollar cost averaging, you remove impulsive behaviors and build investment discipline. Discipline is everything in the crypto market because crypto volatility is nearly impossible to control. You cannot control price movements, but you can control your behavior, your strategy, and your consistency. Every time you buy during a crypto crash using DCA, you are doing what most people fear doing. Every time you buy during consolidation, you are taking advantage of boring moments when most people have lost interest. And every time you buy during a rally, you are still maintaining your long-term vision without chasing unrealistic short-term gains. Dollar cost averaging also makes it easier to set long-term goals. Instead of focusing on flipping small amounts for quick profits, you begin thinking like a serious investor who understands crypto wealth building takes years. DCA supports this mindset because it encourages regular contributions that compound over time. Even small amounts accumulate significantly when invested consistently across multiple years. Many investors who built substantial portfolios didn't do it through luck or risky trading. They did it through disciplined dollar cost averaging during different crypto market cycles. This is why DCA is perfect for people with tight budgets or those who can monitor charts constantly. It works quietly in the background, turning your consistency into long-term value. Another important part of DCA is understanding how it interacts with crypto risk management. Every investment strategy needs risk control, and DCA automatically reduces risk by spreading your purchases across multiple price points. If you invest everything at once, you expose yourself to massive potential losses if the market drops right after you buy. But when you spread your entries across weeks or months, your average cost becomes more stable, reducing the impact of sudden dips. This is especially powerful in a market as unpredictable as crypto. You are no longer vulnerable to bad timing. Instead, you let time smooth out volatility. You let market fluctuations work for you instead of against you. This is the essence of smart investing. Dollar cost averaging also frees you from the pressure of prediction. People spend hours trying to predict tops and bottoms, but these predictions are rarely accurate. Crypto timing is almost impossible, and most predictions come from emotion, not logic. DCA helps you ignore predictions and focus on execution. You don't need to guess future prices because your strategy works in every scenario: good markets, bad markets, sideways markets. You buy consistently and let long-term growth unfold naturally. As long as you are investing in strong, fundamentally sound assets like Bitcoin and Ethereum, DCA will always reward patience. To build a strong DCA plan, you must also understand your personal financial comfort. Your fixed investment amount must be something you can sustain even during financial stress. DCA is powerful only when maintained consistently. If you invest too much and cannot maintain your schedule later, you break the rhythm that makes the strategy effective. But when you choose an amount that fits your lifestyle, you create a plan that is realistic, manageable, and sustainable. Whether you invest daily, weekly, or monthly, the most important thing is consistency. Many investors underestimate how powerful small investments can become. Even investing small amounts regularly, especially during a crypto bear market, can build a surprisingly large position over time. Dollar cost averaging also becomes more effective when paired with strong research. You don't want to DCA into weak projects with poor fundamentals. You want to DCA into strong assets that have proven long-term potential. This is why most investors use DCA for Bitcoin and Ethereum. These assets have strong adoption, real-world use cases, large communities, and massive institutional trust. When you DCA into a fundamentally strong asset, time becomes your ally. The longer you continue, the more your average cost becomes favorable, and the stronger your long-term outlook becomes. Another powerful benefit of DCA is that it helps you build confidence. When you start seeing how your portfolio grows over months and years, you begin trusting your process. You stop worrying about temporary dips. You stop reacting emotionally to sudden changes. You start seeing investing as a steady path instead of a guessing game. The market becomes easier to understand psychologically. You no longer chase pumps or fear dips because you know your plan is working. This level of confidence is priceless, especially for beginners who struggle with uncertainty. Dollar cost averaging also promotes healthy financial habits. It teaches you how to prioritize long-term benefits over short-term excitement. It helps you build a relationship with money where consistency matters more than trends. It turns investing into a lifestyle instead of a risky adventure. The more you stick to your DCA routine, the more disciplined you become in other areas of your financial life, such as saving, budgeting, and thinking long-term. DCA does far more than grow your crypto portfolio. It reshapes your financial mindset. It is also important to understand that DCA works best when you stay patient. Crypto wealth building is not about speed, it is about duration. The people who made the most in crypto did not invest once, they kept accumulating over time. They understood that long-term crypto investing pays those who wait. Whether the market rises or falls, your DCA contributions keep building your foundation. You accumulate through every cycle, you grow through every dip. You benefit from every recovery, time becomes your leverage. And this is why dollar cost averaging remains one of the most powerful strategies in the crypto world. It protects you from emotional mistakes. It removes timing pressure. It builds your portfolio steadily. It strengthens your discipline. It supports long-term growth. It makes crypto investing accessible to everyone, regardless of experience or budget. You don't need predictions. You don't need luck. You only need consistency and time. If you found this deep breakdown valuable and you want more long, beginner-friendly crypto lessons just like this, make sure you subscribe so you don't miss future videos. Your support helps me create even more powerful content for you. Let's keep growing together.